What's up, everybody? Michael Silva here. You're watching episode 5 of Quick Tips,
where I give you just a tip.
Quick Tips is the series where I cut out all the fluff and give you just the tip. In today's episode, I'm going to show you the dark money scan. The dark money scan is just a simple scan using just a couple filters on Finviz. Let's go ahead and hop right into it. Welcome to the computer. I am now going to show you the dark money scan. The first thing you're going to want to do is go to finviz.com and click on the screener tab. Once you're there, go ahead and click on the tab that says all. Your screen then should look like this. There's going to be 3 filters that we use in this scan. The most important one is relative volume. Relative volume is a ratio. It is also referred to as RVol. In Finviz, they use a ratio between the current volume and a 3-month average. RVol is the key to understanding volume flows. It helps you understand if today's trading activity is higher or lower compared to normal trading behavior. A high relative volume signifies that there is something going on. Unusually high volume is also referred to as a volume spike. What we'll be looking for in this scan is a relative volume for over 5. Now, me personally, I like trading stocks that are highly liquid with $1 million or higher of volume. So if the relative volume is over 5, we're going to have to make sure the current volume on this scan for the stocks is over 5 million. This would indicate that the average of these stocks that come up on the scan are typically trading over 1 million. The next step is go to beta and click beta of over 1. Now, if you are unsure of what beta is, it is basically an indicator of a higher volatility of a stock. The link in the description and the one right here at the top of the video will give a better explanation on what beta is and how I use it in my scans. Once you click all those 3 filters, you're going to get a list of stocks. In today's scan, we got a total of 14 stocks that popped up right here. And if you scroll over the ticker symbols, you're going to see the charts pop up. Make sure that on the right side, the volume is indicated from highest to lowest. This will help you see the higher volume stocks which might have more eyes on them. The next step in this process is to simply just look at the charts for a setup that you would like to trade. Me personally, I kind of like this ticker symbol right here, VOLT. So what I do is I bring this ticker symbol into stockcharts.com so I can annotate the chart on how I would trade it. Right here is ticker symbol VOLT on stockcharts.com. And as you can see, this big green bar down here is the volume. And looking back at the chart, it's significantly higher than previous days. Now, this type of candle is known as an inverted hammer candle. So many people might look at this and think, why would I want to trade something like this? Notice how the percentage change just for that day was only up 1.56%, but yet our volume is indicating a lot more shares are being passed back and forth. Now, this could simply be because a news article that came out or some sort of acquisition, or potentially new money is coming into this stock. Now, the current pattern that I see and why I like it is it's showing a previous bull flag. And recently it did a breakout. However, it didn't quite break it out. It was more of a false breakout. So I would be adding this to my watch list to see if there's a continuation further. What I would like to see is a break above 150 in order to trade this to the upside. Where it offers support is right here at about $1.20. So if the price can come down just a little bit lower, it might offer up a very good risk versus reward trade where you can have a tight stop loss down here and then potentially pick up more shares right here just above 120 to see potentially a bounce to the upside. One other type of setup I like is this one, ticker symbol JOB. Now, when I take ticker symbol JOB into stock charts, notice how the indicator of the RSI is way overbought. And this candle right here is also very scary looking. So how would I personally trade this on high volume? Well, this type of candle might indicate that this price action might head lower. So I would be looking at this area as a bounce point of support to have the window closed from this gigantic gap up, so around 60 cents. So I would be putting an alert saying that if the price can come back down from where it's at $1.50 to 60 cents, and I would probably enter in trades right there, I would have a tight stop loss, and then we might potentially see a bounce from that point. All right, everybody, that is all I have for you. That is the dark money scan, something that I use every single day and every single week to find high profitable setups. See you on the next quick tip.